Welcome to part 4 of the Home Buying Masterclass series. In this section, we're going to be discussing the escrow process. So I'm going to walk you through everything from day one when your offer is accepted until you actually get keys for your home. So let's dive right into it. Okay, so one of the most important things that happens after your offer gets accepted is you will typically have a timeline when you need to deliver your earnest money deposit. Your earnest money deposit in California is typically around 3% of the purchase price. Now that is negotiable. You don't have to put 3%, but many offers are including 3%, and it just looks a little bit better in your offer. So what'll happen is the escrow company will reach out to you to give you wiring instructions. You're gonna take those wiring instructions to your bank and wire your money so that you can deliver your earnest money deposit in accordance with the contract. Again, the contract will stipulate what the timeline is, and more than likely, the realtor who helped you buy the home will have discussed that with you already, so you'll be pretty clear on that. So that's how the earnest money deposit works. Next up is the homeowner's insurance. This is really important because insurance has become a real crisis in California. Many insurers have backed out of giving quotes in certain areas due to the high costs of fire hazard areas and other things. So on day one of opening escrow, you want to reach out to your insurance rep and start getting quotes for insurance. This is relatively simple. They're going to collect some basic information from you. And if possible, as always with insurance, if you're able to group your auto, your home, and other things, you can probably get a better rate. But if you're in a high fire hazard area, your insurance premium is likely going to increase significantly. So start that quote right away. Next up is the really scary part for most home buyers, and that is inspections. You are typically going to have two very common inspections when you will be in escrow on a property. The first is the general home inspection, and the second is the termite or wood-destroying pest/organisms report. So let's talk about the general home inspection. Your home inspector is going to go in there and take a look at the property, and he's going to do a general home inspection of the things that he can see. He'll look up in the attic to see if he can find any rodent droppings or any leaks in the roof potentially. He should do a roof inspection, make sure that there's no cracked tiles or any evidence of water leaks in the roof. He will test some of the plumbing. He'll typically test some of the appliances and just do a general inspection of the home. If there is a pool in the property, it will require an additional pool inspection. Many times, home inspectors will offer that as part of their services. And if you're buying an older home that is maybe 50 plus years old, you might also want to do a sewer line inspection to see if the sewer line is in good shape, if there's any corrosion or intrusion in it. If you do a basic Google search, you'll be able to see what that is. So that is the first thing in the home inspection. What is going to happen when you get that home inspection report back is it's going to be totally overwhelming. There is going to be probably 40 to 50 pages of items, and that is actually normal. Even for a brand newly constructed home, you are probably looking at a 20 to 40 page report. Why is that? Home inspectors basically go in there with this concept of they want to tell you every single thing that is a safety issue, even though most sellers don't fix safety issues prior to putting their home on the market. They want to take a look at if there's any code issues. Most sellers don't bring their home completely up to code before selling. And they want to tell you the life range of certain items. So maybe an AC unit, if it's 15 years old, and they'll say the range of the life of it is maybe 20 years old. So they'll want to give you some context on the property, and it's going to be a very thorough report. You're going to want to review that with your agent, ask them any questions, do any follow-up inspections you need, and then also see if there's an opportunity to negotiate for a request for repairs. Okay, so that is the home inspection. Now let's talk about the termite inspection. The termite inspection is basically going to see if anything is eating at the structural parts of your home, like the wood, the eaves, the attic, stuff like that, if there's any evidence of termites or any other rodents or pests. So they will take a look at that and see if there's any issues, if the home needs to be tented. If it is, the average cost, at least here in Southern California, is about $3,500 to tent the home. And then they're going to be looking around the eaves and all that and see if any termites are eating away at that. And if they can fix something locally, like they could just replace a piece of wood, or if the whole home needs to be tented. So that is something that you'll want to consider and work through with your realtor. Okay, next item on the list is reviewing your seller disclosures. In California, sellers are required to disclose to you anything that might be of material value to you. Because that term is so subjective, they will typically over-disclose and let you know anything that they're aware of that are issues with the property. For example, alterations they've done, insurance reports or claims that they've had, any disputes with neighbors, has anybody died in the property? They'll go through a long list of items, and there are two documents that they typically have to fill out. One is the seller property questionnaire, where it asks them a lot of these questions. And then the second is the transfer disclosure statement, or as us realtors call the TDS. And both of them just kind of ask the seller some questions to help draw out their thinking of things that they might need to disclose. You'll want to review those, make sure there's no major items, and discuss them with your realtor. Next up is your escrow documents. These can be a little bit confusing and a little bit overwhelming. Escrow documents are simply an elaboration of your purchase contract, and the escrow company is the neutral third-party company that makes sure that both sides keep the terms of the agreement. So your escrow documents are going to be like signing your purchase agreement again. That's what it's going to kind of feel like, because it's going to outline the terms. It's also going to ask you how you want to hold title to the property, and you can talk to your escrow person or whoever the title insurance company is for the transaction, which typically the seller chooses. You can usually call them and ask them questions about how to properly hold title, or you can also talk to your CPA and for tax purposes, determine what's best for you on how you want to hold title. So that is how your escrow documents will go. They will also likely send over to you the HOA documents if the home is in an HOA. Now, these documents are usually anywhere between 200 to 500 pages, and they're basically a summary of everything happening in your HOA. What is most important for buyers to look at is the budget of the HOA. Make sure they're not running in a deficit, or at least not a large one. Number 2, the CC&Rs, the codes, covenants, and regulations. You want to see what the rules are in your area. And number 3, if you're really interested, read the minutes to the meetings, see about any upcoming changes they might be thinking of making, or potentially suggesting that they could raise the HOA rates. The HOAs typically will raise their rates each year, so that is common. But sometimes there's information in the HOA reports about major renovations that they're planning. And when they're planning major renovations, they typically pass that cost on to the homeowners. So if they're planning to replace all the decks or the roof or the garages, you want to pay attention to those things, see what the assessment is per unit, and make an informed decision from there. But that is a very common thing when buying in an HOA. Okay, next up is the appraisal. You won't have to do much for this, but your realtor should typically handle it, or the listing agent will handle it. They're going to meet an appraiser hired by the bank who's going to analyze the value of the home and make sure it's worth what the contract says it is worth. So that person's going to come, they're going to look at the comparable sales in the neighborhood, they're going to measure the home, and they're going to do basically an analysis of it to make sure that their bank isn't lending $1 million on a home that is only worth $600,000. This mitigates their risk when they go to sell it in case of foreclosure. So just make sure your realtor has some good comparable sales that they plan to bring to the appraisal, and make sure that they are on the same page with you about the plan. Next up is your loan approval. Your loan approval is arguably the most important part of the home buying process, because it is one of the things with so many variables. Typically what's going on during this time from when you enter escrow until you get your full loan approval is your bank is reaching out to you to fill out a complete loan application that is specific to this home. The loan processor or underwriter is going to be reaching out to you almost daily for additional paperwork. And you're basically going to be working with your lender to make sure all the conditions are turned in so you can get that final loan approval. Once you have that final loan approval, of course with the blessing of your lender and your realtor, you should be in a good position to remove your loan and loan contingency so that you can move forward with the transaction. Once you get your full loan approval, typically at that point, they will send you what's called a closing disclosure. And by law, you will have 3 days, including Saturdays, to review this document and make sure all the numbers add up for your loan estimate. Now, some of these numbers are not going to be perfectly accurate, and I'm going to tell you to speak with your lender and they'll explain to you a little bit more why, but some of the things in there are estimated up until the last day of closing. So there might be a slight variation on that. But with that being said, take a careful look at that closing disclosure, work with your lender to make sure you understand all the fees, interest rate, payment schedule, and you're clear on your loan and you can get that loan approval. Once you do get your loan approval and you review your closing disclosure, at that point they will typically order your loan documents. You will meet typically at the escrow company or with a notary to sign your loan documents. And your loan documents are very similar to your escrow documents, but instead of elaborating the purchase agreement, they're elaborating all of your loan terms. The main thing I like to pay attention to when I buy homes is my payment, my interest rate, and impound accounts, which are my taxes and insurance, how much money they're holding for that, and making sure those numbers are accurate. Okay, so at this point, you've gotten through your inspections, you've gotten through your seller disclosures, you've gotten through your escrow documents, your loan approval, and you've signed your loan documents. Now you're at the stage where you're going to be moving forward with the deal and you have to do your final walkthrough. Your final walkthrough will typically happen 5 days prior to closing the sale. And it is not a contingency of sale, meaning it's not advised for you to actually cancel the transaction if you go to the property and find something you don't like. We'll elaborate on that in a second. But your final walkthrough is basically just confirming that the home is in similar condition to when you originally got your offer accepted, and that there's no other major issues, and if there were any repairs to be done, that they did the repairs. Now, you might get to the property and a repair isn't done or something isn't happening. I'm gonna leave that for a different video on how to handle that. But essentially, most people still close the transaction, but they will have the seller complete some kind of document stating they will repair something or credit for something, or they'll withhold money back from their funds in escrow, essentially their equity. Escrow company will not give them that money back until this repair is completed. So there are a lot of different things you can do with that, but we'll leave that for another video because it can get a little nuanced. Okay, so now you've completed the final walkthrough and we are finally at closing day. This is the most exciting part. This is what you've been waiting for. This is what you are looking forward to. And so what happens at closing? Well, closing happens when the title company records the grant deed in your name and takes the other owner's name off of it. And we have confirmation of that. That is when closing happens and when we are authorized to officially give you keys to the home, assuming there is no rent back or delay in possession of the property. So typically what happens is once the buyer, you sign your loan documents will go back to the escrow company. The escrow company will review them, make sure everything is signed properly. They will then send them to your lender. Your lender will review them, make sure they're signed properly. Then your lender will fund the loan. They will give their funds to the escrow or the title company. And once the escrow or the title company receives their funds, typically that day or the following day, they will put you in line at the county recorder's office to get confirmation of funding and close escrow. So with that being said, this is not an instantaneous process. Everything that I just described typically happens over 2 to 4 days. And so if the funds are received by the title company too late in the afternoon, then you will typically close the following day. If they're received in the morning, you might close that afternoon. And sometimes it can happen anytime between 11 a.m. and 6 p.m. So it is not an instantaneous thing. You're at the mercy of the county recorder's office, but that is when you close. That is when you can meet with your realtor, get your keys, and celebrate. Awesome. Well, thank you guys so much for watching this 4-part home buying masterclass series. We gave you a brief overview. We talked about writing an offer, managing the escrow process, analyzing a property, touring homes. We've given you the full gamut. And so thank you guys so much for watching. If you enjoyed this video series, please comment below one thing you learned from it. Like and subscribe to this channel for more great real estate content about the homes, history, and happenings of Orange County, California, and real estate as a whole. Thanks again for watching, guys, and I look forward to seeing you in the next video.